Ladies and gentlemen, welcome back to the channel. AMC stock dropped about 11% here on the day. Holy moly, the market's not a happy guy today. So let's get into everything that happened today. What's going to be happening tonight? Because this sell-off in the markets, if that's what you want to call it, could be a problem tomorrow as well. So let's go ahead and get straight into it. AMC stock down 10.85%, up a little bit here in after hours, 11 cents, up 2.5%. You have filled the gap. And I know it's like one of those things where 2023 has been all about the gap fill for whatever reason in specific stocks or even in the broader index. It's all about the gap fill. And you definitely filled the gap today. So this should, serve as a level to bounce off of. I thought that up here around 480, but I simply just can't forecast some of this shit that happens, right? Some of the things that happen in the broader markets, you just can't forecast. We talked about this earlier in the day. The economic data came out really good in the morning. Really, really good. Durable goods orders came in at 4.7%. You were expecting 1%. This was over 4 times better than expectations. GDP growth rate came in at 2.4%. You were expecting 1.8%. Again, way better than expectations. Everything else came in good. But the bond auction, 7-year bond auction, really is a head scratcher. It's a strange event, what we've seen today. So you were expecting the 7-year bond auction to come in around 3.8%. Some people were expecting this could fall to 3.6%. Guess what it came in as? If you can't see right now, 4.09%. Huh? What in the what? How are you expecting around 3.8% to get 4.09%? 29 basis points larger than expectations. That's more than a rate hike. We didn't even get that much Fed just, yesterday with Fed Jerome Powell. This was weird. Very weird. Nobody wanted to buy these bonds. That's how the yields work. What you actually get paid is a fixed amount. And then based off of, the price of the bond, kind of like a dividend stock, the yield can go up and down. So with these auctions, you get a feeling and sense of demand in the bond auction or just the bond market. Now, to one hand, this is strange because people not wanting to buy the bond is kind of risk on. During times of volatility and stress in the markets, normally you would see bonds get bought because people want that safety. That did not happen today. So that's really strange. Really, really strange. And something to definitely keep on your radar, or something to pay attention to, that's for sure. Now, the biggest thing that actually happened is the BOJ, the Bank of Japan. They have been doing yield curve control for the last 8 years now, to some degree, even before then, over 10 years now. What this is like quantitative easing, but to a certain degree. They will let the bond yields kind of fluctuate in a range. If they start to go too high, that's when the Bank of Japan steps in and starts to buy the assets. They start to push the price of them down. And they were doing this for so long because they wanted inflation. They wanted some form of inflation. And they just were not getting inflation. The Japanese population just didn't want to pay higher prices, so nobody really raised their prices. It's as simple as that. So that's why the Japanese economy, one reason at least, peaked out in the 90s and never really recovered. Now, obviously, if you're in America, I can't speak for everywhere else, but it's basically the same from my understanding everywhere else. You've seen inflation constantly, consistently, 1-2%. And that has caused the actual money, supply to get bigger. That has caused asset prices to go higher. So you wonder why, the Bank of Japan's markets are so whacked. It's because they haven't seen inflation. Now, Japan is starting to see inflation again, which is what they want to see. And it says right here, concern has been growing in Japan about inflation caused partly by a weak yen. With the currency now hovering around 140 to the dollar, the BOJ's policy of holding down interest rates has led to a widening rate differential with the US and Europe, dragging down the yen. A more flexible version of yield curve control could narrow the gap, easing the downward pressure. And the Bank of Japan says they will tweak their policy to allow rates over 0.5%. So it's really strange, and there could be implications for the markets. And I think it's something that just hasn't happened in 10 years. We've been in this world where the Japanese central bank has been stimulating essentially the whole time. We don't know what a world looks like anymore without this happening. Right as the bond auction came out and this news came out, markets started to have a problem. Now, the Bank of Japan meets around 11 p.m. today, Eastern Standard Time. So tonight, you should be getting some kind of move in the futures based off of this. Now, you're also going to be getting some economic data coming out tomorrow morning, which will also be very important. Economic data coming out is going to be, if we go ahead and go to Friday, personal spending month over month for the month of June. That's coming out at 8:30 in the morning, and we're expecting that to be 0.4%. You're expecting personal income month over month to come in at 0.5%, and core PCE price index at 0.2%. So you're expecting really good personal spending numbers, really good personal income numbers, and you're expecting PCE to have declined. If PCE did not decline and PCE remains stable or even going higher, that would be where we essentially have a problem, right? So that's going to be the next big... Are you copying me? Yeah. That's going to be the next big catalyst for tomorrow, at least that could move our markets. Now, this bond auction had an immediate effect on the treasury yields across the curve. The 2-year treasury... You want to go play? Yeah. Okay, go play. The 2-year treasury went up 10 basis points to 4.92%. The 10-year bond went up 15 basis points to 4%. These are the highest these yields have been, almost the highest they have been throughout this entire cycle so far. So when, bond yields go up, typically has sent stocks down over the past 2 years or so. Look what bond yields have done since 2021, since August of 2021, going from a quarter point to almost 5%. This is not good for equity markets, and this is a problem. Now, if we go ahead and take a look at AMC specifically, as you know, the stock was down over 10%. Lots of shorting activity that was taking place across the broader markets. A lot of it might actually have to do with shorts taking on short positions on the Russell 2000, not to mention AMC stock itself. As shorts get taken out on the Russell 2000, the Russell has to actually, I guess the market makers have to actually hedge that out by using some of the stocks that are actually in the Russell. So obviously AMC, probably one of those that gets used quite often. Now, the live short interest of free float did also go up by 1.18% today, now sitting at 29.28%. You're almost at that 30% short interest level. Currently, 151.16 million shares currently sold short. That is up 1.77 million here today, and you're looking at cost to borrow fees still holding steady around 359% as it was in the last video as well. AMC stock is on the threshold securities list. It's been that way for weeks. Now, the positive order value today actually got a little bit better than what we're typically used to, which I find interesting. You've seen 125 orders today, totaling $18.38 million, with a positive order value of 24%. So a little bit more positive, but still, they're not, the hedge funds and institutions, they're not using the options to hedge out their shorts. They're using them to add to their shorts, essentially. And that's really strange, and that's honestly, what's going to fuck them in the end, right? If you're hedged out in your shorts, well, it's not a huge deal if the, stock goes up. You're hedged out. You've defined your max loss. Because when you go short, you have an undefined max loss. The stock could rally to hundreds of dollars per share. Well, if you hedge, you have a max loss, and that's obviously a lot better, I guess you could say. Obviously, hedge funds, institutions have no need to do that, apparently, they think. Now, as far as earnings that came out today in after hours, Intel, good earnings. Roku, good earnings. Ford, little bit mixed. They did raise guidance, so that was good. Enphase, again, kind of mixed, but the stock fell about 15%. First Solar, good earnings. Skechers, kind of mixed. Stock down a little bit in after hours. Overall, pretty good earnings so far. Earnings, I think, is the biggest catalyst that can send our markets down, and we're not getting that right now. So next week's going to be important with Apple and Amazon, and I think that could help dry up some liquidity in our markets, but as of right now, that's just not happening. Earnings have been good enough. Now, if we look at some of the 13F filings coming out for AMC, lots of firms are upping their positions. Some firms are selling out of their positions. But what I find really weird about AMC compared to other stocks and 13F filings that I've been looking at is the lack of these actual 13F filings. A lot of other stocks have a lot more of these 13F filings based on just how many institutional investors we have compared to other stocks. I mean, we have quite a bit of institutional ownership, 456 to be exact. And I mean, you've seen a handful. You've seen maybe 20, 25 of these 13F filings. Not a lot, which is really strange. Maybe they're trying to fix their books a little bit, maybe make things look, maybe better or worse. Who knows? But still waiting on some of those filings from the big guys like BlackRock, Citadel, Vanguard, and some of the big banks. They're still not here for AMC. So there is that. Again, I do expect the stock to bounce right about now, but tomorrow could be a very volatile day. Really, tonight could start that off. So if there's anything crazy that is said, I will bring you that information. I can't forecast that right now, but the way the markets reacted, something could be coming. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.